What are the best small cap stocks to buy over the next several months? The answer and the reasons might just surprise you. Small cap stocks have severely underperformed the major indices so far this year. Just look at this comparison between the ETFs representing the NASDAQ 100, the S&P 500, and the Russell 2000 or small caps. Here's the problem. The NASDAQ 100 is up 17.3% year to date, while the S&P 500 is up 14.6% year to date. Now, the Russell 2000 or small caps are actually down 0.2% year to date. So they're basically flat. But why is this? And more importantly, does it represent an opportunity to make money in this neglected segment of the stock market? Should you even consider adding small caps or keeping your current small cap holdings? This is an extremely important point, so keep watching to find out. Or should you avoid small caps altogether? Before we dive into why small caps have underperformed so far this year, what exactly is a small capitalization stock? Well, as you can see here, currently small caps are defined as publicly traded companies with a market capitalization of between $250 million and $2 billion. As you can see in this table up here, here's how the top 3,213 market cap stocks are currently distributed based on these definitions. So you can see we have 4% microcap, 32% small cap, 32% mid cap, 29% large cap, and 2% mega cap. So basically lump mega cap and large cap together, you've got 31% large cap or larger. Now, back to the topic of small caps. It's not rocket science why small caps have severely underperformed so far this year. There are two reasons. Look, since the beginning of 2022, the Fed has raised interest rates 11 times from a starting point of 0.08% to a current level of 5.33%. Now think about it. That is a whopping 66.6 times increase. That's insane. The second reason, look, the focus of investors and money managers has rightfully been on very large companies who stand to benefit from the shift to artificial intelligence, either directly or indirectly, like I'm showing you here. NVIDIA, Microsoft, Apple, Amazon, Meta, and Alphabet. Let's go back to reason number one, where the Fed has raised interest rates by almost 67x or 67 times since January of 2022. Why would that hamper the performance of smaller capitalization companies? Well, there are two reasons. Look, higher interest rates mean a higher cost of capital for all companies, but this matters way more to small companies that are at a higher risk of running out of capital because they have less resources. Sounds scary, doesn't it? The second reason is because large money managers tend to be value-based investors, meaning they take some derivative of earnings and divide it by the risk-free rate to come up with a fair value for a company. So when interest rates are high, like they are now, the calculated value of companies comes down. So what do these money managers do? Well, they sell these, quote, overvalued companies. I won't get into the details of treating small cap stocks as value plays here, but watch my video titled, Should Warren Buy Tesla? A Question of Value, to find out why trying to buy high growth stocks at a value is a fallacy. Link in the pinned comments below. So what do you think will happen when the Fed finally starts to lower interest rates in response to falling inflation? And which small cap stocks will be the best ones to invest in? Before we talk about that, it's important for you to understand that small cap companies are the up and comers. You'll notice as we look at this list, you won't recognize most of these companies, as you can see here. The Russell 2000 Small Cap Index is market weighted, just like the S&P 500 and just like the NASDAQ 100. So the more successful companies will grow their way right out of the index, leaving behind the less successful companies. In fact, Supermicro, as you can see here, is listed as the largest holding in the Russell 2000, but I can tell you that its market cap is already higher than $2 billion, so it's no longer considered a small cap company. As a result, I would not recommend including a small cap ETF in your portfolio over the long term. In this video, we're focusing on a unique situation where it's possible that small cap stocks could perform better over the next 6 months to maybe a year. So this is really a trading idea, not an investing idea. Let's go back to how to take advantage of this limited time opportunity. Most people won't or can't take the time to analyze 10 or more small cap stocks to select the best ones. But there are some great small cap companies with exposure to the boom in artificial intelligence that might be good picks. I'll put a link in the pinned comments below to this list of IWM's current holdings of small cap companies. If you're not inclined or interested in doing tons of research, then invest in the ETF IWM, as I've shown you here, or invest in one of ARK Invest's funds that focuses on innovative technologies. ARK Invest funds won't give you a pure small cap play, but the innovation companies that are viewed as higher risk by Wall Street should perform well as interest rates come down, as I fully expect they will later this year. As investors pour into the beaten-up smaller and innovative companies, these companies could move higher in a dramatic way. When it comes to taking advantage of the potential coming opportunity in smaller companies, you have two options. One, stay with your current allocation if it already includes exposure to small caps. Or two, add an allocation of small caps to your portfolio, either through the selection of individual companies or by adding IWM or one of the ARK Invest funds, or both. But whatever you do, dollar cost average into them over several months if you choose to go this route. As I cautioned earlier, this is a short-term strategy for potentially increasing your portfolio returns, and it's not a long-term buy and hold strategy. As a result, I wouldn't recommend this for most investors. Most investors will be well served by holding on to large cap stocks and ETFs over the long term. What do you think about small caps? Do you think they currently present an opportunity to play catch up with the large cap rally, or will they continue to flounder? Please let me know what you think in the comments below. Investments and investing aren't that complicated if you know how to allocate your portfolio without destroying your returns and getting little to no protection from downside risks. As an investor, you need to take the long view and allocate according to your risk tolerance rather than fretting about what's currently happening in the world or what everybody else is doing that you read about in the media with their portfolios. If you want to be a better investor, I discuss how to allocate your portfolios in 2 key videos linked in the pinned comments below, titled The Ideal Portfolio Using Just 2 ETFs or Mutual Funds, and The Ideal Portfolio Using Individual Equities. Again, link in the pinned comments. Until next week, I'm Calvin Rose, and thank you for watching Invest Smarter. That's all for now.
Stay up all night, gotta work now. Make up my mind and it turns around. Say that I'm fine till I burn out. Thinking this money sounded so nice. Ambush here in the strobe lights. Pay anything for the high price. This life feels like the sunny water.